Hello and welcome to the Crypto Jungle. My name is Baloo the Bear, and here on the channel, we keep crypto simple. We focus on fundamentals and technicals. Fundamentals don't matter in a bear market, so we focus a lot on technicals lately. If you're new to the channel, I want to invite you to subscribe. And yeah, I'm in a new spot, in Thailand here, just for the weekend, little getaway. So the set is definitely different. I'm in a much brighter and lighter location. I'm not stuck in my little dungeon, my little box there. So in the spirit of that, we're going to take a look at Bitcoin and prepare to avert your eyes. We're going to be looking at it on light mode. So just giving you a heads up, So in today's video, I want to focus on time expectation. So what I've noticed is we're kind of in the range of a bottom. So whether that be at $20,000, whether that be at $10,000, we're kind of in the range where it's appropriate to begin to DCA. But what I'm seeing happen out in the wild, and what I'm seeing happen in my own group as well, is people are really chomping at the bit to make an entry. And I just want to say that we are not in a bull market. We have not been in a bull market for a while, and your behavior as a market participant needs to adjust. It has to adjust. You can't be frothing at the mouth for entries. You have to approach this market with a level of patience. And one of the easiest ways that you can manage time expectations is you can look at previous cycles, you can look at previous charts, and kind of look at how long do things kind of tend to play out? How long do these moves typically take? So we're going to focus on that. Wild echo. I mean, there's a reverberation. Is there an echo? I'm in a pretty... Okay. Yeah, so I want to take a look at the previous cycle. Now, a lot of these ideas have come from, oh God, I forget the name of the channel, but the guy who's been doing the 4-year cycle theory. 4-year cycle is not a new thing. There's a lot of people that track the 4-year cycle, but we're just going to build that kind of 4-year cycle for you here in real time so that you can kind of see the similarities cycle to cycle. So, you know, we'll go back here and we'll take a look at the original cycle back here. And I'm going to use this tool right here. Go back. And I'm going to drag that out to the next market cycle low, which this was a quicker cycle. It was about 170 bars, 170 weeks of price action. Okay, so that was a shorter cycle. So we can lean into the idea of lengthening cycles as well. Let's go to the next cycle. I'm going market cycle. I'm going price low to price low on this. You can go all-time high to all-time high. You can go price low to price low. However you want to do it, there's a couple different ways that people do it. But in the last one, we had about 200 bars. About 204 bars. 204 weeks until we reached our market cycle low. So now if we go and take a look at the current market cycle low to market cycle low, we're sitting at we're currently at 183 bars. Now if we go out to the previous cycle, or maybe even a little bit further, let's go with 212. You know what, let's just go with the previous one because we can only work with the data that we have in front of us right now. So let's say we get a cycle that's similar in time duration. Okay, so we still have many weeks before we reach our market cycle low in terms of time expectation. These markets are cyclical. They seem to move off of the halving. So we do have this kind of pre-programmed time expectation in the charts. So The reason that this is important is, like I said, people are trying to time the bottom by the exact day, and you're going to drive yourself nuts, and you're really not going to get that much more of a well-timed investment trying to nail it by the day, and you're causing yourself a lot of stress. It's very we're not in the market conditions where you should be stressed. If you're sitting in cash waiting to deploy, you should not be stressed. If you're sitting in altcoins waiting for a bottom, yeah, you're obviously going to be stressed. But if you're sitting in cash waiting to deploy, you shouldn't be stressed. You have plenty of time. Let's go back and kind of bring this a little bit more. Let's get a little bit more data here and kind of show you some further key points for managing your time, or your time expectation. So on the first cycle, we'll just drag it back from the market cycle low to the all-time high peak. And that was about 60 bars from the all-time high peak. So that means that we had about 100 bars of bull and 60 bars of bear. Let's get the bear on there too. Okay, so 100 bars of bull, 110 bars of bull, and 60 bars of bear. So relatively about 3/4 of it being bull market or bullish price action coming off of the low, and about 1/4 of the time duration in bearish price action, where there's no point in becoming a participant. Okay, now we'll back it up on the next cycle. This might be a little bit slower paced as we build these things, but we'll drag that back to the all-time high break. And we're looking at 50 bars. So 200 bars total, 150 weeks of bull market, 50 weeks of bear market. So there is a trend developing. We have about 3/4 of the time bullish and 1/4 of the time bearish. Okay. And so now let's zoom in to our current cycle. We will go back to our time horizon back here. If we follow the same time at around 200 bars, which we can absolutely do longer, we've got about 52 bars to the all-time high. So 52 weeks. So that means that we had 150-ish weeks of bull, and we're expecting about 50 weeks of bear. So now we kind of have, I guess you could say, a roadmap, or at least a time expectation cycle to cycle, where if we have 3/4 of the time bullish, then we would expect at least 25% of that time, of the total time, to be bearish, or just adding another 1/3 of the time to be bearish. So we're just past halfway of the bear market, of the downtrend of the bear market. We will spend a lot more time in the bear market as we trade sideways and begin to chop around and build confidence. So what I'm saying here is there's lots of time. There's lots of time. That's kind of the point I'm trying to make here in today's stream is I just want to calm everybody down in terms of time. You have lots of time. If we go back to the capitulation event of last cycle, which is kind of what we're working on right now, we're working on capitulation. It's not really what I expected to see for capitulation, and we'll get to further analysis of that in a sec. But basically, you know, once we reached our market cycle floor, what did we do? Nothing. We did nothing. And we did nothing for 15 weeks. So again, you have time. You have time. Calm down. Everybody's like, oh, are you getting in now? What are you doing? What are you doing here? Are you doing that? You got to play the cycle to cycle. The cycle starts slow. The cycle starts slow, then builds in momentum, builds in momentum, builds in momentum, builds in momentum, and accelerates throughout the bull market until it reaches over-exuberance where things move very, very, very quickly, which is usually where the market participants, the majority of new market participants join. They join when everything is very fast, and they get it into their head that crypto moves fast. It doesn't. It doesn't move fast. It moves slow. It moves fast for a very short window, and then it bleeds out. Then it trades sideways. And it's a very, very slow move. Can't see the top of the chart. There we go. Like your new format? Oh, good. It's not new, I'm just trying it out, but you know, I've been thinking about light mode a lot. So where was I? So yeah, you know, things move slow. So, you know, once we reach our market cycle bottom, if you were not around in 2018, if you weren't around post-capitulation, things were silent. Everybody was wrecked. There was no tweets. There was no YouTube videos. There was nothing. Nothing. It was the longest 3 months of your life. It was the longest 3 months. There was nothing. Okay? There was nothing to do. There was nothing to talk about. There was nothing to worry about. Okay? We haven't quite got there yet. We are still falling. The trend is your friend until it ends. And as it stands right now, we are still in a downtrend. We are still printing lower lows and lower highs. So we need to submit to that and realize that we need some sort of period of accumulation to go higher. This is what I'm waiting for. I'm waiting for this period of radio silence. I want to see this area of accumulation. We need accumulation. You cannot break a downtrend without accumulation. We have to stop falling. We have to trade sideways, build a floor, then you can rally off of it. There's no point. Look at this candle. Look at this candle. You want to jump into this. I just don't see the point. I just don't see the point in jumping into this. Yes, we have a green diamond on the Alpha Numerics Weekly, and you know, when this confirms in 2 days, you know, I'll allocate, but it's such a small amount. Like, it's not a trade. It's just a spot buy. It's me putting Bitcoin on a ledger. It's really, you know, this could mark the bottom, but again, it's going to accumulate. It's going to go into an accumulation. So, you know, for those who are wanting to see price move, there's nothing to rush into. For those who are investors with long-term time horizons, statistically speaking, you're in the zone. You're in the area of accumulation. Whether it's here, whether it's at 18K, whether it's at 15K, whether it's at, in the most bearish scenario, 10K, you're in the zone. You're in the investment zone. So start to DCA in. But for the traders who are wanting to trade momentum, the only momentum that's currently in the market is downside momentum. So let's not, rush into things here. So I want to talk a little bit about this current area here, this current downtrend. It basically takes us into November. So basically the end of the year. So the rest of this year will be bearish. We will not see any bullishness for the rest of this year. Next year, maybe we get some bullish price action, but given the state of the traditional financial system, I don't see that being the case. I see a multi-year bear market ahead, but what we could be seeing in the short term is potentially a bounce. And that's what I think happens here. So I want to talk a little bit more about the bullish side and how there could potentially be a bounce. Now, there's not going to be a bounce for a few weeks, I would anticipate. We need at least 2 weeks to kind of prove this level as holding support. And until we do that, then I just, I'm not chomping at the bit here. But where I would anticipate us to rally to is I think we potentially come to basically this level right here. This level right here is an area of interest to me. So if we do bounce off of the 200, let's turn alphanumetrics off because it's getting a little loud with all of the indicators. So if we do bounce in this general range, and I'm watching the NASDAQ for that, the NASDAQ is basically how we're moving. We are 100% tied to traditional finance. We have not decoupled at all. We are just stocks on leverage. If we do bounce from here, then I would be looking to get a retest of the general area up here. So anywhere between 35 to 38, 36 to $38,000 in Bitcoin, which would be a pretty good move from here. What would that be? Why is it not measuring? There we go. Nearly 100% move, but probably a 50% move by the time you are in position and have the confirmation that we can move up. But yeah, a pretty decent move. Taking a look at the NASDAQ, let's go back to dark mode here. Taking a look at the S&P actually, first off, is we have this channel. When we capitulate, we go to the bottom of the channel. When we have retests, we go to the mean of the channel. So we've gone to the mean several times. Let's actually make this a little bit bigger. So we've tested the mean here once, twice, 3 times, 4 times, 5 times, and we're now testing it again a 6th time. We're in the area of a bounce, potential bounce. We're not going to front run that idea. We're going to let price action kind of turn away from this area and get high time frame confirmations for that. But, we're looking at that general area. If this area does not hold, the next support in the S&P is going to be the bottom of the channel. That's going to really, really, really scare the markets. It's going to terrify the markets if we do get something like that. And what that would look like on the NASDAQ would cause me to kind of approach things a lot more conservatively. Because as it stands right now, this is a pretty large shakeout in the NASDAQ. Now I'm wanting to see how this kind of plays out. So I'm looking for something, potentially if we do bounce here, I'm looking for kind of a double top scenario. So if we get something that looks like this with whatever news the composite operator is wanting to divulge, I think that's it. If you see us in this general area, in the NASDAQ, that's your opportunity. That's your opportunity to really adjust the portfolio and reduce risk. If I see this in the charts, I'm already working on a 100% cash position. If we get to this level, it's going to be it for me and I'm going to be done, because what I ultimately believe will happen is a 70 to 80, maybe even 90% retracement in stock market indexes. The Fed is not here to prop up the stock market. The Fed is here to defend the dollar. They can defend the dollar by protecting the economy, and they can defend the dollar by making the stock market strong. But the point at which the Fed starts to depreciate the dollar by protecting the stock market is the point at which they stop protecting the stock market and focus solely on the dollar. And the way that you defend the dollar is you increase interest rates and you reduce inflation. If they increase interest rates and reduce inflation, everything will tank. Everything will tank. And this is the system that we have built. This is the system that we live in. We live in a fractional reserve banking system. It's by design used to create booms and busts. It creates booms and it creates busts. And I think when we look at this structure, it looks like a parabolic fucking shitcoin. This is a parabolic move. What happens after a parabolic move? A 90% correction back down to, these levels. So keep a level head out there because it is dicey. Taking a look at the dollar, we are seeing a lot of selling coming at this level right here. You can see that we have these wicks on top. Little bit, there's a bearish divergence developing in the DXY and the US dollar. So if we begin to trend down, I think that'll be, again, a good narrative. So we get something that kind of reacts back down. Maybe we go into an accumulation and then we rally in the dollar. So this move was very significant, very large move. We have made a lot of people a lot of money who were trading the Forex markets, who were trading the dollar. They've made a ton of money. They're cashing out their chips. So we're seeing a lot of supply come in. We can get what's called an LPS, last point of support. And then from that point, the dollar can rally. And if it does rally, that's going to be pretty much the end of the stock market, figuratively and potentially literally. The stock market it's ripe with opportunity in terms of innovation, and I do think that blockchain technology will be a very integral part to the future of finance and the future of stocks, trading, equities, commodities, all of that. So we could be witnessing the early days of literally the end of the stock market. Again, that's just a theory. It's not something that should be taken as gospel. I am just some dude on the internet, but I have my own theories, and it would be very interesting to see something like that play out because the stage is set. The stage is set for something like that. Let's catch up with the chat. Like your old chart theme? Yeah, I'm conflicted with the whole chart theme thing. I like it for branding. It looks good with my brand. It's colors that I choose, dark mode, synthwave, all of that stuff. But at the end of the day, I'm an educational YouTube channel. I'm an educational stream. And I think that familiarity is kind of something that's overlooked for a lot of people. So if you're like a new user, let's say you're brand new to TradingView, it's going to feel a lot less intimidating if you're watching a streamer who's streaming with stock settings where, maybe, he's streaming on light mode, and when he pulls up the RSI, the RSI looks exactly the same as when you pull up the RSI. When you pull up the volume looks exactly the same as when you pull up the volume. The green candles are green, the red candles are red. I think that can be a lot more beneficial for a newer consumer. But we'll see. I'm playing around with some stuff. Is there any way that mining can return to the little guy, or is the trajectory just continuation to bigger and bigger Bitcoin mining companies? I think that for mining, if you want to be a miner, you have to buy expensive equipment. So being a hobbyist miner is always available. If you have an old computer, you can mine Bitcoin. It's going to be really, really inefficient, but you can technically contribute to, discovering blocks. But yeah, if you're going to look at it as a business, you need expensive ASIC mining equipment, and you need a way to subsidize your power bill some way to remain competitive. One thing that's kind of interesting that I could see happening in the future is retail kind of starting to run Lightning nodes. So being a hub of transactions for the Lightning network. Right now it's not very profitable, but if we get an exponential rise in the demand for Lightning nodes, then one day it could be potentially popular. I'll have to make a video on managing a Lightning node, but I think the Lightning network has more opportunity in it than the core blockchain infrastructure right now. So in other words, keep calm and stack sats. Any thoughts on the SolveCare network? No, I don't. Not looking at, it's not the time for shitcoins. And you know, shitcoin is just a catch-all term that just means low cap coins that aren't Bitcoin. It's just not, we're not in that part of the price cycle. So my thoughts on SolveCare is I wouldn't touch it for like a year. And I don't even need to look at a chart to tell you that. Your PNP of you, I prefer dark mode, cooler on the eyes. Yeah. You gotta work those eye muscles. We gotta work those retinas. If NASDAQ retraces and we get a 90% drop, you will stop hodling your hodl portfolio? No. And the hodl portfolio is small. It's really, really small. It's insignificant. It's money that no longer exists anymore. For me, anyways. And the reason that I say no is because I'm very concerned about regulation and access to my sats. So if I sell them and the government, you know, creates a situation where you have a very hard time gaining access to like Bitcoin, like actual physical Bitcoin, I never want to put myself into that situation ever. So when I put money in the ledger, in the hodl account, I am turning fiat into sats, never to be turned back the other way, ever. Never. Those are sats. I bought the sats. They stay as sats. They will be spent as sats. They will be traded as sats. They will pay for goods in sats. They will always be sats. They will never again be dollars. And that may not be you. That may not be the majority of people. That may not be 99% of people in crypto. So don't follow me because that's what I'm doing. But I kind of fell in love with crypto because I am kind of, I guess you could say, a libertarian, I have libertarian tendencies. I feel that we should always have something that's not controllable by the government, and Bitcoin is the only thing that can't be controlled by the government. So if Bitcoin trades down to like basically nothing, for the hodl account, I don't care because the Bitcoin will always be mine. Bitcoin is the only thing, it's the only thing in this whole fucking world right now that can't be taken away from you. And I'm not selling that. There is a small percentage of my net worth that will never be sold. It will be used as Satoshis for those who are willing to accept it. But no. Nope. Not selling that even if we see a 90% retracement. In fact, I'll just be adding to it. Not sitting in the dark, yeah. Light charts are easier to see. Love your work, thank you. What do you think? What do I think about what, Constantine? If you were to buy a new ledger today, which are your top choices? For me, I like the Trezor. I like Trezor Model T. The only reason I like that is just because it has a touch screen, so it's just easier to press buttons. It's easier to type in your access code. It's easier to look at transactions and sign them. Ledger X, I don't have a ton of experience with Ledger X, but it hooks up to your phone. You still have to type in your access code with the buttons manually on the ledger, but then you can sign and view transactions on your phone, which is a good thing. hardware wallets all kind of suck. Like, they're not great. The user experience with hardware wallets is not great. They just suck. But it's what you need to do because we're so new. We are so new. You are early. You're too early. We are so fucking early in crypto. It's ridiculous. So the user experiences are terrible. And because they're terrible, we have to use these stupid, air-gapped freaking signing equipment just to sign a transaction. Do you have a referral link? No, I don't. Trezor doesn't do no, I don't have one just go get it. Go find somebody else who has it. But thank you very much for asking. That's very considerate, so thank you. I do not have a referral link. Their affiliate program's a little bit more involved. All right, where was I? Oh yeah, I've got to basically close out the show here, but there's a few more things that I want to take a look at. So we took a look at the DXY. I want to see a retracement in the DXY. So here's what I wanted, bullish case scenario. Let me summarize it. DXY, I want to see a retracement, okay? I want to see the DXY continue to pull back and find support. Next, I want to see the NASDAQ rally off of this low. None of this has to happen. This is just what I want to see. I want to see the NASDAQ come off of this low. Then I want to see Bitcoin dominance trend down. I want to see Bitcoin dominance trend down. If we can see all of that and we can see Bitcoin hold this level, I think we have enough of a cause built for a short-term rally up to around the $35,000 to $38,000 level. At which point, we could break past it. I'll just observe the price action here. We could break past it, but ultimately your number one chart to pay attention to for crypto is the NASDAQ. You need to pay attention to the NASDAQ. It's the number one. That's like the only chart you need for crypto health right now is the NASDAQ. We are so tied to traditional finance. It's not funny. But yeah. Okay, we are early. Does that mean Bitcoin will hit 1 million? I think Bitcoin has the potential to hit 20 million, or sorry, not 20 million, 2 million, 2.5 million, maybe 2.25 million dollars a coin in the next major, basically once we hit our super cycle. So I do think that there will be a super cycle. For us to build a cause for a super cycle to take place, I think we need to go into about an 8-year bear market. So that's the catch. That's the downside of it. I think we go into about an 8-year bear market where we do not make a new all-time high. There will be ebbs and flows. We will rally, we will react. There will be ups and downs. But ultimately, I don't think we make a new all-time high for about 8, 9, maybe 10, worst case scenario, 12 years, although I just don't see that being the case. And then crypto enters its hyperwave. And when it enters its hyperwave, it's going to go from potentially $10,000 lows up to over $2 million a coin. That's my anticipatory price projection. So yeah, I think $1 million a coin is easy. Easy in the right context, easy with adoption. If we have adoption, if we have apps, large popular apps being built on the Bitcoin network, easy. Not an issue at all. How many Bitcoin are you going to try to accumulate in this bear market? As much as feasibly possible that's not going to represent, as much as feasibly possible that's not going to affect my quality of life. So, very subjective. It matters greatly on the price of Bitcoin. It matters greatly on the income flows in the context of a recession. There's a lot of factors that go into that. 8 years, ain't nobody got time for that. If you want $2 million Bitcoin, you have to accumulate. You have to accumulate for a long period of time. Where do I get these numbers from? Amazon. it's called building a cause. In the Wyckoff method, if you want price to go up, you have to trade sideways for a long time. The longer you trade sideways, the larger the price advance. So this is where I think we are. I think this is crypto today. This was the dot-com bubble. Dot-com bubble is about to burst if it hasn't already burst. I think the crypto bubble is about to burst if the crypto bubble has not already burst. I'm not talking bear market, I mean just bubble gone, it goes. And then we had about, how long was this? I think this was about 6 years, maybe 8 years. Let's use this. Where is my tool? About 3,000 days. What is that? It's like 10 years, just under 10 years. About eight and a quarter years. So 8 years of sideways price action. And then Amazon did a hyperwave. It did global adoption. We went from Amazon selling books on the internet in the dot-com bubble to Amazon doing literally fucking everything and like owning the internet. Amazon does everything. Do you know what Amazon's number one product is, by the way? A lot of people don't know this. Amazon's number one product in everything, their number one product that they sell is web hosting. They sell internet server infrastructure as their number one product. So basically, in other words, Amazon is the internet. And I think that Bitcoin is going to be the next internet. Bitcoin is going to be the backbone of the internet. And that's how you're going to get a $2 million Bitcoin. We're going to do something like this. So, with stops along the way, a little bit of chop, and then boom, off to the races. All right, that is all the time I have for today. Let's just catch up with the chat real quick, and then I got to get out of here. Ain't nobody got time for that. Is there anything else that you would specifically try to accumulate along with Bitcoin? Probably not. No. Monero. I like Monero. Baloo, were you the one saying Solana won't be able to scale? What do you think about that Cardano? I think Cardano, up until this cycle, was something that I would never touch because it had no products and it had very culty following that kept the valuation of Cardano too high. Now it has products and it has a dedicated user base that is using those products. So it's time to reassess. I still think it's overvalued and it's not the time for altcoin allocation, but Cardano's not off the table. It's not off the table. Okay. Watched your channel a long time ago. Remember me? I'd frequently ask best intro in crypto. Yes, I remember you now. Yeah. What about hot wallets? Good idea or no? You can run, honestly, a very, very, very secure hot wallet. I'm going to leave you guys a link right now. If you want to run a hot wallet, or if you just don't want to buy a ledger, then just download Gnosis Safe and just create a safe with yourself. So this is a multi-signature wallet. It's a multi-sig, okay? And what that means is for this wallet to do a transaction, it requires a quorum. So you can set it up, if it was just for you, how I would set it up is I would attach 3 wallets to it. 3 different private keys, 3 different hot wallets. And then what you're going to do is every single time that you want to do a transaction, you have to sign 2 of the 3 transactions. What that means is that if one of your wallets gets hacked, if you make a mistake online and a hacker takes control of your wallet, anything that's in the safe can't be touched because they only have one signature. This is pretty powerful. So, it basically creates a hot wallet that's unhackable by one user. The hacker would need to take control of two of the wallets that sign this safe, this multi-sig wallet. So that's exponentially more safe. I reckon this is a tool that's used by a lot of the DAOs. So they'll have quorum. Let's say there's 10 developers on the team. They need 6 signatures to process a transaction. Whatever the case may be, you can set it up however you want. But if it was just you and you just wanted to create a really secure hot wallet, use Gnosis Safe and create a 3-signature wallet where you need 2 signatures. Why 3? Because if you lose the private keys to one, you still have access. As long as you have 2 signatures, you have access to that wallet. So if whatever happens, you lose your private key to one wallet, you sign on a new wallet, and you're never going to lose your keys with that because you have multiple sets to the same wallet. Always have backups. But yeah. I didn't join the Cardano cult. Fuck you guys. Yes, it is. Gnosis is related to so Gnosis was kind of a enterprise solution company, and they just acquired the XDAI blockchain to further their blockchain development. I really like XDAI, by the way. XDAI is one to watch out for, which is now Gnosis chain. But yes. Do you have advice on keeping passphrases in a safety deposit box at the bank? That's a great place, for your my camera's getting really overexposed here, but that's a great place. If you have a safety deposit box at the bank, keep a copy there. It's just good to make multiple copies and keep them in separate physical locations. As somebody who has experienced a house fire, a house fire can make you lose all your money if you're in crypto. And having your private key in a safe doesn't necessarily work either, especially if you live in, let's say, the forests of California. I also used to do a lot of forest fire mitigation, and I can tell you that a home safe will burn. A home safe will burn to the ground. All of its contents will be destroyed in the context of a forest fire. So if you are in an area that has forest fire potential, even though when you buy the safe it says fireproof or fire resistant, fire retardant, whatever the case, that's for a house fire. If your house catches fire, your safe will be fine. If the forest catches fire, your safe is gone. It's going to be disintegrated and melted. So just keep it in different physical locations in areas that you trust, and that's fine. Okay, I've gone over my time. I do have to get out of here. If you guys are interested in joining the community, I only stream here twice a week on the Monday open and the Friday close. So if you are wanting to get more interaction with the community, I encourage you to join the Discord, links below. And yeah, that's all the time I have for today. Please go ahead and take a look at the private group, links below as well. 25% off